Good morning, everybody. Welcome. 10 Figure Business Mastery on a live webinar Wednesday. Kind of digging that jam. Let's go. All right, guys, welcome. Let's go. Let's get into it today. I want to really give you some value in this webinar this Wednesday. Happy Thanksgiving, by the way. Good to be with you. I'm especially excited this Thanksgiving because my family is here. Right? My family came in. They flew in from New Jersey. When I say my family, my son and my daughter came in, and my brother, they're coming down. He and his wife and his kids are coming down, and man, I'm excited about Thanksgiving. I'm so grateful. I'm so thankful. I am so blessed, is what I want to say. So once again, welcome. We're going to get this party started, guys. Welcome to 10 Figure Business Mastery live webinar Wednesdays. Of course, if you didn't know already, my name is Cheston Bulgin with By the Books Consulting. I'm the senior consultant and founder over here. And this is how you reach us, 888-4BTB now. Okay. It is at the end of the year. We're doing a Black Friday sale for any catch-up and cleanup work, so 30% off that. So if you want to take advantage of that, you can definitely reach out to us by any of these means. You can call us at 888-4BTB now. That's 888-428-2669. Or you can reach out to us on the web. There's a strategy session that you can schedule for us to go over and review what you've been up to financially to see what you're dealing with. And we'll come up with a game plan. And then you have a really great Black Friday sale discount and a Cyber Monday discount on these services so that you can get right come tax season. And yeah, you can reach out youraccountingsuperhero.com, bythebooksconsultants.com, or send me an email, cheston@bythebooksconsultants.com. Okay. Now, in that theme of things, real quick before we get started, let's do this disclaimer real quick, and then we'll talk about some of these things. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and/or legal professional for specific advice. And I just want to go over our tenets real quick. There are principles behind this game of 10-figure business mastery. Number one is intentionality, which is mindset mastery. Number two is financial literacy, which is also financial mastery. Number three, structures, which is also system mastery. And number four is actions, which is also execution mastery. So we have all these components working together, and we win inside of business, guys. So everything comes down to the actions at the end of the day, but what gives us the actions that will deliver the results that we want? These other things that we want to keep in mind, the intentionality, which is understanding what it is that we want in life clearly and being focused on that and that only. Financial mastery, understanding that number story, being able to get the information and understand it in a way where we can have a choice available. And in structures, once I do something, if there's a system in place to keep that thing moving forward, I leverage so I can do a lot more with less. Okay. And those actions keep coming over and over and over again until we build out here the thing that we're really looking to build. Okay. Now, in the spirit of preparing for taxes, today I'm really going to get into a QuickBooks. Not really so QuickBooks, but we're going to use QuickBooks as the platform, but really financial mastery inside of what you're up to in business. Now, at the end of the day, you're in business to make money. That's one of the main things that you're in business for. There are other things that we do business for, like we feel as though we have a purpose as a contribution. We're actually delivering something of value. There's longevity and all those things that we look at in terms of like what the meaning of life is for ourselves and our contribution to others. That's a big deal, okay, inside of business. At the end of the day, we want to make sure we're able to continue to do that by being successful. And we measure this success in terms of money, how much we make, okay? And how do we understand how to improve that? How do we understand how to make sure that's moving forward clearly? There's a lot of disconnect in terms of organization that can come up to have you as an entrepreneur be overwhelmed with some of the back end tasks, the administrative work, the paperwork behind your business, how we pull all this together. So let's talk about it. I really want to go into number one, income. Okay, and just the income, making sure we're tracking and monitoring that in a way that we can see like what it is that's working inside of your business and what's not working inside of your business. The idea behind this is simplicity in reporting. So there are times when you and I, we get a financial statement and we don't really understand what it means because there might be so much information on that financial statement to bring it into clarity. Some information needs to be there, some information does not. And then how do we distinguish what wants to be on that financial statement? So if I have a profit and loss statement, I want to understand what my income was. Like, what did I bring in overall, the revenue? What was that number that we brought in total? And then we want to look at the direct cost to that. So the direct cost to that revenue are things that I would have to incur directly to produce that revenue. If I did not like sell or sell that service, sell that product, then I would not have that direct cost associated with it. So I want to understand what those impacts are distinctly when I'm looking at my finances. Like, okay, I sell widgets, so it takes me, $3 to produce a widget, but I sell this widget for $15. All right, so my cost of goods sold, my direct cost would be $3. Okay, so I want to understand how much that's costing me to produce that thing that I'm selling, whether it's a product or service. So if you're providing a service, those things look like labor costs, and maybe if you're a hybrid approach, there might be some material and product costs associated with delivering the service and a product at the same time. So if you're a contractor, you're pretty much in that world. You know that you have materials that you need to purchase, and you want to make sure that you get compensated for the materials because that's a cost that's directly related to that job. And you want to understand how much you're paying for labor because that's a cost that's directly related to that job, and how much you're profiting above and beyond that. Okay, so you might have that down if you've been in business for a while. You understand what those numbers are for yourself. You know that you want to make this much over and beyond what you're actually paying for it. But how do you read that and produce that on a financial statement to see whether or not did you win that game consistently and reliably? Are you set up inside of your business processes to be able to see these metrics at any given point in time? So let's take a real quick look, a snapshot, if you will. I'm going to go ahead and share my screen. Okay. So a couple of things. And just bear with me a second, guys. I'm going to hear a sound here lower on my desk because I'm going to get real with you. Anytime I get real with people, it means I'm sitting down. And let me just make sure I'm sharing this screen here. Anytime I get real with people, I sit down on this stool and we go in, man. We get like serious about it. We get like those heavy details. So bear with me while I lower this desk. Okay. All right. So if I want to set this up inside of my financial reporting and recording, like to really understand, when I'm selling services, how much money I'm making with that service and how much it's actually costing me, like how much I get to keep afterward too. Then I want to have this whole design built out inside of our systems to deliver that end result. So if I go here, this is a sample company in QuickBooks Online. Some of you have seen this before, some of you have not. We want to go to the reports for the year. And if we take a look at the profit and loss report, this is a year-to-date profit and loss report. You can see that because it's going from January to November 22nd, January 1st to November 22nd this year. And off the bat, if we take a look at the income, there's design income, then they have discounts given, then they have landscaping services, and then underneath that it talks about job materials. And this is all income, guys. This is income that they're making from the materials for the job. There's plants, soils, foundation lighting, fountains and garden lighting, rather, sprinklers and drip systems. Like all these things are here on the profit and loss statement, top line, right? And then there's more, right? This is just job materials here. If we collapse that, we can see there's more. There's labor, right? And labor that, and the maintenance and repair, okay? Installation, number one, and then maintenance and repair, number two, okay? So that's there. Now, you see me collapsing this, and even as you see me collapse on these individual line items for income, I want you to check in and see how you feel about that. It's like, oh man, that's actually more clean. That's a little bit better for me to look at. I mean, that's the feeling that you get when you look at the numbers in their simplicity. They make more sense. It's not so much out there. Now, if I wanted to drill down and get more into it and have more information come at me about this, then I would expand this or even drill down into each transaction to find out. And if we expand this again and drill down, we can drill down to each transaction, see what made this up, and we can understand, okay, these are the transactions that delivered this result. I can do that if I want to, but when I'm looking at this report, the profit and loss report, I want to be able to understand quickly and easily, how well did I do? I don't necessarily need to see every single detail. The main things are overall income generated, like the revenue brought in. That could be one thing. And then the cost involved, which is even down here, guys. As I'm looking at this on the fly, there's even more stuff. Pest control services, sales of product, income, more services. All this is here in the income. And really what I just want to see is this total revenue brought in, which is this number here. That's what I want to see. I don't necessarily want to see everything else. So even if I collapse this here, that's really what I want to see. And I want to see the cost of goods sold, which are all my direct costs. What did it cost me to produce that income? And I want to see the gross profit. Now, if I'm looking at this profit and loss statement as it is right now, it gives me the feeling of clarity in what I'm looking at. This is how you want to start processing your financial performance inside of a profit and loss statement. You want to have it clean, clear, without all of the extras. There are going to be enough line items in this based on the type of expenses that you have, the nature of your expenses in your business. The expenses really build out exactly, how do I want to put that? The expenses are the things that are going to build out your financial statement to a large degree. Those are the things we want to look at to monitor distinctly on a profit and loss statement to really see the impact of those on our performance. We want to have those things stand out line per line. Income, one of the easier things to track inside of a business. And when I say easier to track, it means that there are a lot less transactions related to incomes for the most part than there are for expenses. All right, so most of the time you'll see that there are so many different expenses that we pay out inside of a business, like category wise, than we have of income. There are a lot more transactions that we deal with on the expense side than we deal with transaction volume on income, for the most part. So expense heaviness is what I want to say. That's really how financial statements usually read. And I'm hoping that makes sense the way I'm delivering that. Okay. Now, if we take a look at how this is now, top line, revenue, which is the income, cost of revenue, cost of goods sold, gross profit. Boom. Beautiful. Love it. Fantastic. Okay. Now we get into expenses. And this is pretty good here. Advertising costs, and we have car and truck or automobile expenses, which is fine. And then they have a subcategory for fuel. And then they have the total here. Okay, so I'm looking at this, and even inside of this, guys, what I'm saying is, if you have this category here and then you have subcategories, well, this one here wants to be just this number up here wants to be 0. And we want to have all those other categories subcategoried out. If you're starting here with fuel, you want to have maintenance, repair costs for automotive, maybe maybe a toll. Some people track tolls here and parking here for automobile. So all those things inside of what's here could be subcategorized just like they did with fuel. That's another thing. If you're going to do that, then do it all the way. Equipment, this is good. Equipment rental, insurance expense, this is good. Job expenses. Now, I like the way that they have job expenses subcategorized here, because sometimes, especially if you're doing things like this company here, this landscaping company, you want to be able to see on your reporting, your expense reports, more so the detail in here. Because you won't be able to get that on the sales report, guys. The difference here, because I'm saying it, I'm not up here so much to line item that out to give more subcategories inside the income, because we can get reports on our sales side, the income side, that can give us all those details. Sales by product, sales by service. We don't need to see that here. We can actually get another report that gives us all the drill down. Where conversely here on side of our expense side, if this is a major expense, which means it really is something that you incur a lot, and you want to understand the impact of those expenses, then it warrants you being able to break this out into subcategories, right? And even so, here too, like job expenses, this is more so like out of alignment on this report because it wants to be up here in cost of goods sold, like direct costs, right? Now we want to understand like the impact of the job, like the job expenses per income in relation to the income that was made, because it cost me that much to produce a job, right? So they had this material, decks and patios, plants and soil, sprinklers, and drip systems. Not all like direct materials for the job want to be here to give us an accurate accounting for the gross profit, because this is not really a reality. This number here now that we're looking at it, right? So hopefully, like as I'm going down the line here, you guys are really getting the understanding that it matters, like where we place things and what we choose to put inside of our profit and loss statements and all of our financial statements and how we track that. It matters. It gives us the real understanding of what's happening inside of the business, so that we can really choose. Now, they can see this on the report, but it's not really giving them like the quick bird's eye view perspective that you and I would want to say, okay, well, this is my gross profit margin. This is my gross profit, and this is my gross profit margin. Let me actually get that out here so you can see what that would look like. Okay, so now if I do this, you see this 100% of income here. This is what we wanted to see. Right now, it's saying that the cost of goods sold, which are like the direct costs, they're saying it's only 3.97%, but that's not reality. The reality is that we have an additional 9.39% in direct costs, right? So my gross profit would be more so in the lines of 86%, not 96%, right? So that's the thing that we want to see, because if I have that metric, then I know, well, this is what I need to do in order to scale, and this is what I need to do to improve. I can go out here and make money and keep, 85% of the money that I generate is what we keep gross profit wise. That's pretty decent. How can I improve it? Right. But if I'm looking around, you see how I had to piece that together just by taking this number and making it go into this number, right? And so those are the things that take time away. And for you and I, time is the most valuable resource that we have. Okay. All right. So now we're looking at down the line, their legal and professional fees. And I like this because they want to understand, like for what I'm looking at, they want to understand what they're spending on each: accounting, bookkeeping, and legal, right? So I like that. You might not want to separate all this. You might just want to have the total here, which is what most people do, right? But I do like this. I don't like this, that this is an outlier, because this is not really categorized. If you're going to do something, do it all the way inside of your reporting. And when I say if you're going to do something, do it all the way, there's a transaction in here that's not categorized to either accounting, bookkeeping, or lawyer. But what is it then? I don't know, because all these I know that's what that's for. But I don't know really what this is inside of the legal and professional fees. But these are distinct. Right? So this is how we want to design our accounting processes in our business so that it makes sense for you and I. Okay. If we're going to do something, do it all the way. Maintenance and repair, same thing here. They subcategory, but then there's this number here that's ambiguous. So you have equipment repairs that are hashed out, but what is all this inside of maintenance repair, right? And then of course here, meals and entertainment, meals, good. Office expense, good. Rent and lease, that's clear. But this is how it wants to look, guys. See how this has no number here, but they have all the subcategories and everything's attributed to the subcategories. That's how we want that to look. That's beautiful right there. Okay. And then of course you have the net operating income after all is said and done. So in the plus side, yes, that's a win. And then we have this thing called miscellaneous. That's never good. We don't ever want to have a miscellaneous category. We want to have make sure that everything has its pure classification. Miscellaneous is not a classification. Okay. And then you have your net income. All right. So guys, I just went down that list real quick to give you an idea of, what you want to do when you're reading a profit and loss statement, and also some of the things that businesses can do to leave it not so clear inside of the financial reporting. But how do we make it clear? When we're doing our sales, like our product and services, we're actually building those things out in whatever platform we're using. We want to make sure that the mapping of those is such that it reflects the clarity in reporting that we desire. We want to make sure the mapping is such that it identifies and it makes the clarity of reporting the clarity of the reporting what we desire. So what I mean is income, right? So inside of what they're doing, they have service income, which is a broad scope of the type of revenue that they bring in, the service revenue, service income, and then they have product income. They have two different types of income in this business that we can see. The one side is that they're providing a service for the client, whether that's design, whether that's labor, installation, maintenance and repair, whatever that is. That's more so in the line of service revenue. All right, we're providing the service, we get revenue for the service. The other side of that is product sales. Okay, so the product sales for them is when they sell out the fountains and garden lighting, the plant and soil, the sprinklers and drip system. So those are like product or material sales. Okay. They do pest control services, right? And then they have they say sales of product income. So and then they have services here. So all of this is like so disorganized inside of the flow, right? There's too much here, right? Because they're duplicating certain items inside of their revenue reporting, like sales of product income, service income, and then they have pest control services, which is also service income. They have installation, which is also service income. They have maintenance and repair, which is also service income. Then you have product sales of product income, and then they have sprinklers and drip systems as its own thing. So you can see all of this is like too much, and it wants to be simple and straightforward on their profit and loss statement. But how do we do that? All right, so we're going to start doing the design of this. Okay. They already have this service revenue, the services income set up, and they already have sales of product income set up. So what I would like to do is simplify all their income into just this. And it doesn't erase the fact that they can go in here and have a detailed reporting of where that came from. But this wants to be in a separate type of reporting. The profit and loss statement wants to be that statement that you can produce to yourself to understand quickly what it is that you did performance-wise in your business. And you're able to give this information to your lender. You're able to give this information to your tax person so they can get a real good, quick idea of what you did performance-wise in your business. And performance-wise meaning like how much money did you generate and how much of that money that you generated were you able to keep, right? Without having all the extras. clean. Okay. So how do we create that clean reporting inside of our profit and loss statement? Well, we go set up our products and services. Right? We're going to come here and set up our products and services to map everything to what it needs to be mapped to. So design, custom design, we're going to edit this thing. And right now it says design income. We're going to change this to services. All right, because that's already there. We're going to update all the historical transactions and boom. Now that's going to read the way we need it to read. We're going to do the same thing down the line here with every single one of these. And this is going to be more so services. All right, so we're going to move this into services, update all the transactions historically. And then we're going to keep going down the line here. Actually, this one was, yeah, that's concrete was a service material. This one is product inventory. So we're going to move this to sales of product income, which is already there. Fantastic. That's great. Going to go to Rock Fountain to see what the deal is with that. Is that sales of product? Yep, that's fantastic. That's good. Lighting. This is a service. So we're going to... Now, it's interesting that they put here that this was a service, but it's more so materials. All right, so they're buying job materials. And, you know, it actually could go either way because I get what they're trying to do here, right? Because inside of product sales, they might not, well, if they're purchasing these materials and they're reselling these materials to the client, then there's going to be a sales tax thing going on. So that's going to determine whether or not this is going to be product sales or service, right? Right now, I'm going to move this to product sales because it seems like they're buying some material, something that they're purchasing, and we're going to move it to product sales, sales of product income. All right, we're going to update all those transactions. And then we just did the Rock Fountain, we just did garden lighting, that's good. And so we're going to do rocks. Rocks is the next thing. We're going to do the same thing here. I'm going to create this as sales of product income. And I'm going to update all the historical transactions. All right, and then we're going to come here to services, and boom, that's already what it needs to be. Great. Then we're going to come here to gardening, and I'm going to move this to services. Update all these historical transactions. Now, guys, it doesn't mean that they don't get to see like landscaping services because they already have this as a category of product and services. All right, so they can see that on this report when they pull that sales by product and service report. All right, so it could be that. Right now, did the installation gardening. Now we're doing hours. Good. Sod. Sorry, did we do we need to change this up to services as well. Actually, this is job material, so they're actually selling this as material, so that's product sales. Update the historical transactions. And then we do this one, maintenance repair. All right, so we're going to change that to services and update the historical transactions. And soil product sales looks like. And then we have sprinkler head, same thing, product sales. Good. They already have it good there. Sprinkler pipes. Let's see. They most likely will have that same. Yep. That's great. Trimming service. And then pest control. As you see, they have this category here. It's already set up. It's a redundancy to have it as a chart of account, which is the pest control services income. That is redundant when it's all service income. Okay. And returns and allowances allowed. This might be discounts, refunds and allowances. Now, it's interesting because they can have a product here for refunds and allowances, and this is the only distinction here because we want to make sure that we count for all that negative income for discounts, refunds, and allowances. We want to make sure we categorize that as such. Okay. All right. Now, if we go back to the reports, and go back to that profit and loss report. Let's see. We missed something along the way because there's still some things here that are showing this as the landscaping services. Gotcha. So we need to go back there and fix whatever that is that shows up still. And it was somewhere in here, I think. Was it Garden? It wasn't the Garden Rocks. Let's look at this. That was there. That's good. That's good. That's good. That's good. That's good. That's good. That's good too. Some of these I may not have hit that update historical transactions button in the process. There we go. This is the one. Okay. Services. We always want to make sure we update the historical transactions. So I missed that. What else? I miss. That's there. That's still good. That's still good. That's good. That's good. That's good. We did this, right? Yeah. And we changed that to refund allowances. Okay. So it looks like everything is updated. And I may not have hit that update historical transactions feature on here. Just gonna quick bird's eye glance one more time. And now we're going to go to reports again. And we're going to pull up that profit and loss report. Nope, it's still showing this. All right. So we got something to look at here, guys. But ideally, you can see that this actually went up, though. The services and sales of product income. And we did remove, there was a lot of different service incomes that were up here, like design income and pest services and all these other income sources that we removed. So it's getting cleaner, but there's a couple of things in there that we want to look at to make sure that I did update the historical transactions. Because now it's a matter of shifting this. Let's see what that might be. Shifting that to product sales, right? Got it. So now they're writing this off as job materials, right? Which is a misclassification because this is in the income section. This is another thing, guys, that shows up. So much to go along with this, guys. When we find out exactly what's happening inside of the financials, we can get all these things cleaned up and rectified in here, because there are some processes that you and I do that put our financial reporting out of alignment, and that's what's happening here. Even on this sample company, there's a lot of work to be done, right? But look, guys, I want to acknowledge that it is 10:37. We went 7 minutes beyond what our normal time is, and I wanted to really leave you with clarity, okay? That's really the thing that we want to deliver inside of our financial reporting is clarity, especially with the profit and loss. Now, this conversation deals with you and I being able to have what we want and need at the end of the year so that we can move into filing our taxes, number one, or we want to make sure that we have what we want and need at any given time to produce it to whoever it is that was going to invest in our company, be it a lender or another investor that we want to secure capital from. We want to make sure that our reporting is tight, right? So take the time to set everything up properly in the beginning. It does start with the design. If you have the design on the front end of this, then everything else will fall into place on the back end. I'm taking the time here inside of what it looks like to go back and redo certain things that weren't designed properly in the beginning, but you don't have to do things after the fact. You can set it up from the start just by thinking it through, all right? So guys, it's been great being with you today. I definitely love making sure people understand, the entrepreneur understands all the things that matter inside of business to deliver what it is that we want. Like that, today is that clarity in our financial reporting so that we're always prepared, we're always ready to be compliant and understand performance in our business, make those choices, and attract investors, okay? Thanks, guys. Have a great Thanksgiving. It's been great being with you, and I will talk to you next week. Bye-bye.